Ever heard of an interim dividend by a company higher than its own share price? Well, IT firm Majesco announced exactly this yesterday, a record dividend of 974 rupees per share. Let's do a three-point analysis to find out if investors should view this as an opportunity. 1. An eye-popping interim dividend. Majesco's board of directors yesterday approved payment of interim dividend of 974 rupees per share for FY21, while the share price at the time of announcement was just 972 rupees. Now, at the face value of 5 rupees per share, the dividend of 974 rupees per share translates to a rate of 19,480%, which is the highest declared by any listed firm in recent times. Now, the company has fixed December 25th as the record date for the dividend. Now, this interim dividend payout translates into an amount of 2,788.4 crore rupees on a shareholder base of 28.5 million shares. Now, the balanced cash reserves estimates at 103 crore rupees will also be distributed subject to board and regulatory approvals. 2. What are the company's future plans? Well, after this dividend dissemination, the company will still be left with this 103 crore rupees of cash, which actually translates into 36 rupees per share, which the management has indicated that they plan to disburse it. Majesco is also now looking to monetize its real estate holding at Mahape, and also that should take around or close to about a year. However, post-monetization of the real estate, the company will decide the best method for distribution of sale proceeds to the shareholders. Now, back in October this year, Majesco had also announced a 630 crore rupees share buyback, around 25% of shares floating in the market at a price of 845 rupees. Now, 3. Should you invest in Majesco for the whopping dividend? Well, while dividend payouts are always good news for shareholders, the Majesco announcement, however, has led to questions about taxes that investors would actually have to pay on this kind of a dividend. Now, it may be recalled that recipients did not have to pay any tax on dividends until March 31st of 2020. However, the Union Budget of 2020 announced that all dividends received after 1st of April 2020 will be taxed at the hands of the individual. Some of the experts are therefore also suggesting that it will be better for an investor to really sell the Majesco shares or book profits instead of paying a higher amount as dividend tax. Experts also suggest investors to look at the tax bracket they are in currently and then decide. They say that in this case, if the individual is holding even one share of Majesco and is in the 30% bracket or tax bracket, he or she will have to pay a tax of 292 rupees per share. The incidence on high net worth individuals will be much higher, as they will be also subject to higher surcharge. Now, for somebody in the higher tax bracket, experts say it would definitely make sense to sell the stock before the dividend distribution date in the market. Mazhar Mohammed, who is the chief strategist, technical research at chartviewindia.in, has told Moneycontrol that the recent high of 1,009 rupees is a near-term top for this counter. He also said that for the time being, fresh buying is not advisable, whereas investors who own the stock can continue to remain invested until the ex-dividend date.